Hello and welcome to the day ahead. It's Monday, the 7th of November. I'm Andrew Gagan. Well, global shares rallied on Friday. US stocks finishing higher amidst volatile trading on Wall Street as investors were wrestling with a mixed jobs report, which came in stronger than expected but indicated some slackness in the tight labour market. All major indices are rising around 2% initially before turning negative, only to rally towards the end of the session. For the week, however, the S&P 500 lost more than 3% and the Nasdaq lost 5.5%. Meanwhile, speculation of an easing in China's COVID restrictions offered support, particularly with US-listed shares of Chinese companies, including Alibaba, which finished up more than 10%, and JD.com, up close to 10%. Commodities were also boosted, which lifted the materials sector. Stocks specifically, Starbucks jumped after topping Wall Street estimates for quarterly comparable sales and profit, and shares in DoorDash also rising on its revenue beat. And confectionery firm Hershey raised its annual sales and profit forecast, with earnings per share expected to grow by between 14 and 15%. Meanwhile, a Bank of America global survey of fund managers has revealed $62 billion flowing into cash in the latest week, the largest inflows since the COVID crash of early 2020. Well, US jobs growth increased more than expected last month, but the pace of growth slowed. Non-farm payrolls increasing 261,000, the smallest gain since December 2020. And the unemployment rate increased from 3.5 to 3.7%, suggesting some loosening in the labour market. Annual wages increased at their slowest pace in more than a year, rising 0.4% in October to an annual pace of 4.7%. And labour force participation was lower at 62.2%, and the employment to population ratio fell by the most in 2.5 years. Meanwhile, Chicago Fed President Charles Evans has said it's possible the Fed to be thinking about pausing even if it's a year from now, saying stepping down to a pace that's not 75 basis points, giving the Fed committee a little bit of runway to see more data before you get too far ahead of where you eventually want to be, makes sense to me. The US 10-year yields rose to near 4.16%, the 2-year falling by about 4 points to 4.66%. And the US dollar weakened against major currencies, the Aussie dollar rising from lows of 63.3 US cents to a high of 64.8. Well, the SPI futures are up 1.3%, indicating a strong opening on the local share market this morning. On the commodities front, global oil prices surged on Friday, Brent crude rising more than 4% to $98 a barrel on speculation that COVID restrictions in China will be eased, driving up demand for oil. That also saw iron ore futures rise more than 2%. But for the week, it ended up down more than 8%. Copper surged 7%, leading base metal prices higher, and a weak US dollar helped spot gold climb 3% to close at $1,680 an ounce. And Bitcoin jumped to a 7-week high over the weekend, taking the broader crypto market with it. Taking a look at what's ahead locally, a NAB business survey, Westpac consumer confidence and ANZ job ads. Plus we'll get the Deputy RBA Governor speaking and the weekly payrolls and wages figures. And overseas, China trade balance and its inflation numbers, along with inflation in the US and the US midterm elections, as well as consumer confidence out of the States. And locally, Westpac full-year results have dropped this morning. Cash earnings falling 1% to $5.3 billion, while statutory net profit rose 4%, and the business drove down costs by 19%. A fully franked dividend of 64 cents a share will be paid. And looking ahead, the bank's saying it expects economic growth to slow and the unemployment rate to rise. And that is your day ahead. We'll see you again tomorrow.